Imagine turning a small ice cream parlor into a global restaurant empire worth over 238 billion pesos. Today, we're diving into the fascinating story of Jollibee Foods Corporation, how it's conquering Southeast Asia, revolutionizing fast food, and why investors can't stop watching this Filipino powerhouse.
And what's really interesting is how they're absolutely dominating in markets you might not expect. I mean, their recent numbers are pretty mind-blowing.
Let's start with those numbers. What are we seeing in their latest financial reports?
Well, looking at their Q1 2025 results, Jollibee achieved a remarkable 27.8% system-wide sales growth across Southeast Asia, excluding the Philippines. That's pretty significant growth in established markets.
Wait, 27.8%? That's huge for a company this size.
Exactly. And here's what's fascinating. They're not just growing, they're strategically expanding. In 2024 alone, they opened 51 new stores across Southeast Asia.
That's quite an aggressive expansion. How many stores are we talking about in total?
As of March 2025, they're operating 9,935 stores globally, 3,393 in the Philippines, and 6,542 overseas. It's pretty remarkable when you think about it.
Those are impressive numbers, but what's really catching my attention is their stock performance. How's that looking?
Well, their stock has been quite interesting to watch. They're currently trading around 214 pesos per share, with a market cap of about 239 billion pesos.
And what about their financial health? Are they actually making money with all this expansion?
You know, that's a great question. Their Q1 2025 net income was actually down 8.1% to 2.41 billion pesos, but that's mainly due to higher non-operating expenses.
Interesting. So despite the expansion, they're dealing with some challenges.
Yes, but here's what's fascinating. They're not letting that slow down their growth strategy. They've actually announced plans for further expansion in Southeast Asia.
Let's talk about their success in Vietnam. I heard they just hit a major milestone there.
Oh yeah, they just opened their 200th store in Vietnam, and get this, almost all their customers there are Vietnamese locals. That's pretty remarkable for a Filipino brand.
That's impressive market penetration. How are they managing to connect so well with local consumers?
It's all about their localization strategy. They're really smart about adapting their menu to local tastes. Like in Vietnam, they introduced chili chicken, and in Malaysia, they have spicy spaghetti.
So they're not just copying and pasting their Philippine menu everywhere.
Not at all. But they do maintain their core products. Their Chickenjoy fried chicken is still their flagship product, recognized globally. It was even named Best Fried Chicken by USA Today.
That's quite an achievement for a brand that started as an ice cream parlor.
You know, that's one of my favorite parts of their story. It really shows how far vision and execution can take you.
Speaking of vision, what's their current strategy for continued growth?
According to their CEO, Ernesto Tanmansiong, they're committed to a 5-year strategy of tripling their attributable net income.
That's quite ambitious. How are they planning to achieve that?
Well, they're focusing on several key markets. Beyond Southeast Asia, they have 560 stores in China, 361 in North America, and 393 in Europe, the Middle East, and Africa.
Those are some diverse markets. How do they manage such a wide-ranging operation?
They've got a really strong management team. Their leadership includes the founder Tony Tan Chakcheng as chairman, and they've recently brought in new executives like Richard Shin as CFO.
Let's talk about their market performance. How are investors viewing the stock?
The stock's been trading at a PIE ratio of about 24.17, which suggests investors are still betting on their growth potential.
And what about dividends? Are they returning value to shareholders?
Yes, they're paying dividends, about 1.48% yield, with the last dividend reported at 1.33 pesos per share.
That's not bad for a growth company.
No, it's not. And what's really interesting is their market position in places like Brunei, where they're actually the market leader in the QSR category.
That's fascinating. How did they achieve that in such a competitive market?
It comes down to their focus on taste and quality. Their spicy Chickenjoy, for example, has been particularly successful in Singapore and Malaysia.
So they're really leveraging their core strengths while adapting to local tastes.
Exactly. And they're not just focused on their main brand, they've got a whole portfolio including the coffee bean and tea leaf with 1,246 stores and Highlands Coffee with 865 locations.
That's quite a diverse portfolio. Are they looking at any new acquisitions?
Actually, yes. They recently signed an agreement to purchase a 70% stake in Taiwan's Moon Food, which is known for wellness soups.
That's an interesting move into the wellness space.
It shows they're thinking beyond traditional fast food. They're really trying to diversify their offerings.
What about their sustainability efforts? That's becoming increasingly important to investors.
They're actually quite focused on that. They publish regular sustainability reports and have appointed a chief sustainability officer, which shows their commitment to ESG principles.
That's becoming increasingly important in today's market.
Absolutely. And it's part of their broader strategy to position themselves as a modern, responsible global company.
Let's talk about challenges. What are the main risks they're facing?
Well, they're dealing with increased non-operating expenses, and there's always the challenge of maintaining quality across such a vast network.
And competition must be fierce in these markets.
Definitely, but they've shown they can compete effectively by focusing on quality and local relevance.
What about their digital transformation? That's crucial in today's market.
They're investing in that area, though specific details aren't public. But their focus seems to be on expanding their physical presence right now.
Interesting strategy in an increasingly digital world.
Well, in many of their markets, physical presence is still crucial for brand building and market penetration.
Let's look ahead. What's next for Jollibee?
They're clearly focused on their Southeast Asian expansion, but they're also looking at untapped markets and new partnerships.
Any specific markets they're targeting?
They're actively seeking new franchisees in untapped Southeast Asian markets, though they haven't specified which ones.
So there's still room for growth in the region.
Absolutely. And with their track record of successful market entry, it's definitely something to watch.
What would you say is their biggest strength going forward?
I'd say it's their ability to maintain their core identity while successfully adapting to local markets. That's not easy to do at this scale.
And their biggest challenge?
Managing growth while maintaining profitability. That 8.1% decline in Q1 net income shows they need to balance expansion with cost control.
So what's your overall take on Jollibee's future?
Despite the challenges, their strong brand, proven expansion strategy, and solid market position make them a fascinating company to watch in the global food service industry.
Well, that brings us to the end of today's episode. From a humble ice cream parlor to a global restaurant empire, Jollibee's story shows how the right mix of local flavor and global ambition can create something truly special.